Welcome back to the channel, guys. Another week has closed, and we have 5 stocks that have broken out in the past week. Let's take a quick look at how the broader market performed over the past week. The Dow Jones Industrial Average edged up by 0.3%, the S&P 500 gained 1.1%, and the Nasdaq Composite led the way with a solid 1.8% rise. Overall, it was a strong week for the markets. Let's see how long this rally continues, especially in light of the latest inflation data. In January 2025, the Consumer Price Index, CPI, rose by 0.5% from the previous month, bringing the annual inflation rate to 3%, up from December's 2.9%. This increase was unexpected, as economists had predicted a 0.3% monthly rise and an annual rate holding steady at 2.9%. With this inflation surprise, traders now see a lower probability of interest rate cuts in the near future. Current projections suggest only one 25 basis point cut by December 2025, which is one cut fewer than the previously expected 2, already reduced from an initial 4 by the Federal Reserve. We will see how things play out later, but for now, let's dive into the first company on the list today. But before we dive in, remember to treat this channel as a screener for stocks at crucial levels, not as investment advice. Tapestry Inc., ticker symbol TPR. The chart on your screen is currently set to the monthly time frame, but don't let that intimidate you. The breakout happened just this past week. As you can see, the stock made a high of $79.70 all the way back in March of 2012. That means it has been nearly 13 years since the stock traded above this level. But last week, it finally broke out. And not just that, the breakout candle looks strong. Now let me switch to the daily time frame because I have something interesting to show you. If I zoom in, you can see that after the breakout, the stock initially pulled back, retested the breakout level, and has now started moving up again. In the last 4 trading sessions, it successfully held its breakout zone and is now showing signs of further momentum. The key level to watch here is the current market price of $87.70. This is where the stock had previously faced resistance after breaking out, so if it pushes above this level, we could see a stronger upside move. From a technical standpoint, the stock is trading above both its 50-day and 200-day exponential moving averages, which is a positive sign. But the most interesting part is the sheer length of this consolidation. 13 years below a resistance level is no small thing. For some perspective, when the stock pulled back after making its all-time high, it dropped about 87%. Now, if we were to measure an equivalent move on the upside from the breakout point, that would take the stock to around $150. Of course, this is just an observation, not a target, so keep that in mind. Overall, this setup looks solid for a short-term momentum play. Keep this stock on your radar and let's see how it unfolds. The company we just discussed is Tapestry Inc., ticker TPR. They operate in the consumer cyclical sector, focusing on luxury accessories and lifestyle brands. Their business is divided into 3 major segments: Coach, Kate Spade, and Stuart Weitzman. The Coach segment includes global sales through retail stores, e-commerce, and wholesale distribution. The Kate Spade segment follows a similar model, offering handbags, clothing, and accessories. Meanwhile, the Stuart Weitzman segment is primarily focused on footwear and accessories, operating through its own branded stores. Now let's dive into the financials. TPR has a market capitalization of $18.16 billion. They generated $6.78 billion in revenue with a net income of $795.7 million, leading to a profit margin of 11.74%. The PE ratio stands at 25.46, with an earnings per share EPS of $3.45. Additionally, Tapestry offers a dividend yield of 1.6%, making it an interesting option for investors looking for income in the luxury retail space. Next up, we have Palomar Holdings with ticker symbol PLMR, and I have opened the chart on the weekly time frame. As you can see on the screen, the stock made a high of $121.87 back in August of 2020. Since then, it has traded below this level for about 4.5 years. Not as long a consolidation as the first stock we discussed, but still a significant period. Last week, it finally broke out, and the breakout candle looks strong. Now, let's analyze a few key points. Just like the first stock, this one is also trading above its 50-day and 200-day exponential moving averages, which is a good sign. Switching to the daily time frame, let me zoom in for a clearer view. You can see that the breakout actually happened on February 13th. The next day, February 14th, the stock pulled back slightly. But what's interesting is that the buying resumed exactly from the breakout level. This kind of price action is usually a positive sign, as it suggests buyers are stepping in at key levels. Going back to the weekly time frame, let's measure the dip it had after making its previous all-time high. The stock declined by approximately 64% from its peak. If we were to project a 64% move from the breakout level, we get a price of around $200. This is also a psychological resistance level. So if the breakout gains momentum, it's a key level to watch. Again, this is not a price target, just an observation based on past movements. Keep an eye on this one, and let's see how it plays out. The company we had a discussion on is Palomar Holdings Inc., ticker PLMR. They operate in the financial sector, specifically in specialty property and casualty insurance. Uh, their primary focus is on residential and commercial earthquake insurance, particularly in high-risk states such as California, Oregon, and Washington. Looking at the financials, PLMR has a market cap of $3.36 billion. They reported $553.86 million in revenue, with a net income of $117.57 million, leading to a profit margin of 21.23%. The P/E ratio is 28.32, with an EPS of $4.48. Next up, we have Afya, ticker symbol AFYA. Unlike the first two horizontal breakouts, this one is a downtrend breakout. I've pulled up the daily chart, and you can see that the stock made a high back in March 2024 and has been in a prolonged downtrend since. The interesting part about this breakout is that the trend line had multiple touch points, 4 to be exact, before finally breaking out, making it a strong setup. Now, while this is a clear breakout, no one can predict where the price will go from here. Some stocks I've pointed out before didn't move as expected, and that's just the nature of the market. My goal is to highlight these stocks at crucial levels early, so you can do your own analysis and decide whether to take a trade. Personally, I never go all in on a breakout. I prefer to wait for a retest. If the stock pulls back, finds support at the breakout level, and shows buying interest, that's when I look for an entry. I also keep my targets realistic. If I get a 5% profit, I trail my stop loss to 2% and lock in gains. And if the stock continues to rise, I adjust my stop loss accordingly. But if it drops below my set level, I'm content with securing a modest 2% profit. I don't chase big moves because I know how often breakouts fail. A 4% gain each month may seem small, but it compounds to nearly a 50% return over a year, an exceptionally difficult feat to achieve. Let's take the first stock, TPR, as an example. We saw it break out and then come back for a retest. On the 11th of February, a green candle formed exactly at the breakout level. That's where I entered the trade. As of now, I'm already sitting on a solid 8% profit. At this point, even if the stock loses momentum, I'm not worried because my stop loss is in place. I'm happy locking in a 4% gain if needed. But if the stock moves higher, I'll trail my stop loss accordingly. If it reverses, I'll take my 4% and exit the trade. And honestly, just getting one such trade in a month is more than enough. Let me emphasize, it's not easy. Making even 4% or even 3% per month from the stock market is far from simple. Coming back to Afya, the stock is currently facing resistance at $17.70, with the next key level at $18.40. It is trading above both the 50-day and 200-day EMAs, which is a positive sign. Keep this stock on your watch list and see if the breakout sustains, pulls back for a retest, or continues moving higher. As always, these are not recommendations, just observations of stocks at crucial levels. Do your own research before making any trading decisions. The company we just discussed is Afya. They operate in the consumer defensive sector, specializing in medical education. Afya provides an end-to-end physician-centric ecosystem offering undergraduate and graduate medical education, residency preparation, and continuing medical education programs. Now, onto the numbers. AFYA has a market capitalization of $1.59 billion. Their total revenue stands at $616.74 million, with a net income of $112.85 million, resulting in a profit margin of 18.3%. The PE ratio is 14.59 with an EPS of $1.21. Afya currently does not pay a dividend, which is common for growth-focused companies in the education sector. The fourth company on the list today is AXSM. I have the chart opened on the weekly time frame, and if you look closely, the stock formed a double top around $110 back in December 2019 and April 2020. Since then, it has traded below this level for nearly 5 years. Last week, it finally gave a breakout. Looking at the EMAs, the stock is trading above both the 50-day and 200-day EMAs, which is a positive sign. If we analyze the historical dip, which was around 82%, a similar move from the breakout level would take the stock to approximately 200, another psychological resistance level, just like the second stock we discussed today. Now, here's a concern. After breaking out, the stock has already surged about 20% without a pullback. Moves like these can be risky if entered late. Personally, I would wait for a pullback to the $110 breakout level and see if buying interest emerges before considering an entry. That's my approach, but you can follow your own strategy. Keep the stock on your radar, track its momentum, and trade it if the setup aligns with your style. The company we had a discussion on is Axsome Therapeutics Inc., ticker AXSM. They are a biopharmaceutical company in the healthcare sector, focusing on treating central nervous system CNS disorders. Looking at the financials, AXSM has a market capitalization of $6.36 billion. They generated $338.46 million in revenue, but reported a net loss of $310.95 million, leading to a negative profit margin of 91.87%. Given their losses, the PE ratio is not applicable, and their EPS is negative $6.54. The fifth and final breakout stock for today is with ticker symbol BYRN. This is another horizontal breakout, making it similar to 3 of the 4 stocks we've discussed, so I won't go into a detailed breakdown. I'll just highlight a few key points. The stock made its previous high in August 2021 at $30.50. After consolidating for about 3.5 years, it has finally broken out this past week. Currently, the stock is trading at $32.80. One concern here is that since its absolute bottom in October 2023, the stock has already surged by an incredible 1,400%. If that's something that concerns you, take note of it. On the positive side, the stock consolidated just below the breakout price for about 6 weeks before finally breaking out, which is a good sign. That's all for this one. There's nothing much to add beyond what we've already discussed for similar setups. Keep this stock on your radar. Oh, and by the way, did you catch that breakout and retest pattern that I so fondly talk about all the time? Well, let me bring it to your notice. Now, I'll leave it to you to open the chart of BYRN stock and analyze this breakout and retest pattern for yourself. Okay, so these were the 5 stocks that broke out this week, but there were 6 more stocks that broke out last week. If you want a detailed discussion on those, check out the video highlighted on the screen. If you'd rather just get the stock names, here they are. First is AGI, second is SSNC, third is G, fourth is AZPN, fifth is ATEN, sixth is K. I'd still recommend watching the video because I don't want you to miss certain nuances, like especially the risks these stocks may carry. Plus, it also helps with the views and engagement on the channel, which in turn helps me grow the channel further. At this point, I'd also request you to give this video a thumbs up and share your genuine feedback in the comments. If you have any suggestions or even criticisms, I'd love to hear them. I'm always looking to improve. Though I have a 9-to-5 job and don't get much time for editing, I'll try to incorporate as much feedback as possible to enhance the quality of these videos. Oh, and if breakout stocks aren't your thing and you'd rather look at stocks that are at strong support where the downside is limited, then check out the video on the screen. It covers 6 stocks that have the potential to double or even triple if their support holds. This isn't clickbait. These stocks are at a crucial level with a strong chance of moving upward. So make sure to check out that video as well. I'll link both of these videos in the description box and the pinned comment. So we have talked enough about breakout retests, right? I've highlighted multiple times how important they are. If you were wondering whether we have some stocks currently at their breakout retest level, yes, we do. Today I'll discuss two of them. The first stock retesting its breakout is Middleby Corporation with ticker symbol MIDD. Take a closer look at this one. It made a high of around $162 back in May 2022. After multiple breakout attempts, August 2022, January 2023, and April 2024, it finally succeeded on January 21st, 2025. Now, after the breakout, the stock has retraced and seems to have found buying support at the breakout retest level. Looking at the daily time frame, you can see the stock came down to retest its breakout level, and from that point, there was immediate buying. In percentage terms, the stock has moved up 4.22% from the retest level. Disclaimer, I personally entered this stock on February 12th at $164 and currently hold a 2.6% profit. My plan is to stay in the trade for another 2 to 3% and then trail my stop loss. However, if the momentum fades, I'll exit at my break-even point. For the record, this stock is trading above its 50-day and 200-day EMAs, which is a good sign. The second stock on this list is Victoria's Secret, with ticker symbol VSCO. A similar structure to the previous one, it made a high of $30.70 in February 2024, then traded below that level until a breakout finally happened. Now it is retesting that breakout level. I won't go too deep into this one since we've discussed this pattern multiple times. Just keep it on your radar and track its price action over the coming weeks. So that's all for today. We covered 5 breakout stocks, 2 breakout retest stocks, 6 breakout stocks from last week, and 6 stocks at support. Keep all these on your watch list and track their momentum. If you found this video useful, please give it a like and leave a comment. Your feedback helps me improve. Thanks for watching, and I'll see you in the next one.